All right, guys, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Wednesday, January 9th. The averages gave back a little bit of the gains today, but you could see, some of the political nonsense happening at the end of the day, which, the market doesn't like that when you get those headlines. But SPY finished up about a 0.5%, 47 basis points. The diamonds, the Dow finished up 40 basis points. The small caps and NASDAQ both with that outperformance again. Even the mid caps too. I see that on my screen up 1% on the day. So, that's still really good, right? We're still seeing the small cap outperformance as we've been seeing now for the last week or so, is that small caps are outperforming. So a pretty positive day. So I guess the elephant in the room that everybody is talking about these days, all the cool kids are talking about is the NIMO, right? The McClellan oscillator, right? So this thing has gotten from oversold to overbought, hugely overbought in the short term. So how do you use this thing, right? Everybody's talking about it. Well, basically, it just means that we've advanced really quickly, and we've done so. I think the comparison is the last time that something like this has happened is 2008. So this brings up a good conversation. I tweeted this out earlier, but it's really difficult to kind of understand what I'm trying to say, and just you're limited to what you can say in a tweet. But 2008, right? From learning back, and I traded through the 2008 2009 financial crisis. I was a institutional trader. I traded a lot of notional, big money when I was on the desk at Merrill Lynch. And I remember those fierce bear market rallies, right? I mean, it would look like there was a bit of sunshine because we would rally similar to what we're doing now. And then we would just kind of go back and take out the lows and make more lows. So that's still in people's mind, and especially if you traded back then. And there's plenty of comparisons. If you look at a 2008 chart, 2009 chart, you can kind of map that out for yourself and take a look at those bear market rallies. However, right, so I mentioned a lot of positives to be learned from them. The negative, I think, is we're not in 2008, we're not in 2009, right? We've got a whole different market, and I think part of the problem with that, or the negative of realizing, if you traded back then, and if you dealt with that pronounced long downturn, it kind of sticks in your mind, because anytime there's a correction, anybody thinks, oh, this could be 2008 all over again. This could be 1987, So you have these things in the back of your mind, but really the possibility of that happening, sure, it's a percentage. There's probability, but it's a low probability. And if you look at the VIX, right, that doesn't look anything. And that trying to, so make a comparison to 2008 with only one indicator, and not kind of that's only one piece of the puzzle, right? So not looking at all the pieces together, and you can see that this is nothing compared to what we experienced in 2008. And so far, I don't have a crystal ball. I don't know if we are going to break, come back and break the lows. I can't tell you that for sure. But this is not even close to a comparison. So yeah, I would go back to to that NIMO, and I think it's important. If we match that up with the technicals and kind of put together another piece of the puzzle, the overall indices, and by the way, going back to the VIX, we're back to what we just dipped under 20 in the VIX. So what that means to me is also when the VIX is around a 30, 35, or even 20, even 25, 30, all stocks tend to, not all stocks, but the correlation among single names tends to pick up. Meaning everything moves together, no matter what name you hold in the S&P, they tend to move more in line with one another when volatility is higher. Once the VIX dips back below 20, it becomes a stock pickers market again. And I think that's kind of what we're seeing. We're starting to see that now, because if you look at this chart and the S&P way below the 200-day moving average, you'll go through some single names, and if you're doing your homework and you're doing a good job, you're finding names that don't look anything like this, or don't resemble this chart at all. All right, so I'm going to go through some more names. We've been doing that all week long. I've been playing names that just don't look like this at all for the last 2 weeks. But you have to be you have to be smart at this point and realize that as an individual investor, you don't have to stay fully invested at all times, right? I mean, you can make the decision to hedge. You can make the decision to sell upside premium. There's a lot of different things that you could do. Shift a little bit more into cash. So what do we got going on besides the resistance that we're coming up to? Basically right up here, 26.39, and I would even say the 50-day moving average. And if you look at SPY, you could see that. I'll just take a second to bring up the SPY chart. But yeah, I mean, that's even closer. So it looks a little bit different than the S&P futures. All right, so same thing here. Just to kind of look at IWM, just the difference here in IWM. I mean, it's also coming up here. So what's a good scenario here at this point? And by the way, just because the McClellan is overbought, you could see on the RSI we're not overbought yet. So if we do a little bit of back and filling, and again, I don't have a crystal ball. I don't know that that's going to happen, but just kind of to do a scenario analysis. If we kind of come back a little bit, that should burn off some of those levels again. So that being said, let's talk a little bit about today's price action. But yeah, I mean, that's kind of what I'm doing is, in single names, so before I go into sectors, I took some profits in some things today, right? Keys was a really nice, it actually went a little bit higher than my price target, but this was a name I took off. I took off CVNA today. But, as you think we're getting a little bit of stretched, this worked really well. This I actually took off right at the top of value, 36.80 today. That was my exit point. So nice name there. So let me go into some sectors, because I think if you start looking at some of these sectors, you'll find that there's some nice some nice things going on here, and some names coming off the lows pretty hard. So this is the home construction ETF, or the home builders ETF. I know XHB, which we saw a call buyer in yesterday, is called the home builders ETF. But really, if you're looking at builders themselves, like Lennar, they have a higher weight in this ETF. I know it's weird because they named it funny, calling it the home construction, but Lennar, they said some nice things on the conference call. They said that the move down in interest rates, which I think is important, long and short, right? The long-term interest rates have come down a little bit, and they've seen some buyers come back into the market. So really nice. And remember, a couple months ago we saw some call positioning in Lennar. So it looks like if they held it through earnings, which is really difficult to do, to hold a long swing options into earnings, but they got paid to do that. So or paid today, I should say. So I think that is something new. And on the short term, just to mention a couple sentences about the Fed, we had the Fed minutes today, and it sounds like, yeah, they're less hawkish, right? And, if we go back to looking at whether they're going to raise interest rates much for this year, 2019, Fed fund futures are not implying that. I didn't check this today, but let's just take a look. It's ticked up a little bit. It's actually increased from when we looked at this, 2 days ago. There's, for May, there's now a 10% chance. It's still really low, the chance of a rate hike. The probability, when we looked at this a couple days ago, had more numbers in here versus zeros, but it looks like the probability of a cut is also moved down a bit. All right, so this group really strong. And if you go into, if you don't want to, I understand if you don't want to own a builder, you may think it's a little bit, risky. You could look at some things like Home Depot, which had a nice day today. This, I've been looking at this Home Depot chart. It's tough, and as I go through names and so forth, and we've seen this big bounce in stocks, just realize, of course, that you can't be in every stock, right? It's okay to miss some of these, but, obviously you have to have some trades in there, but you can't there's going to be moves that you missed this last week. It's impossible to be as fast and to catch each one of these moves. But Home Depot gave a little bit of a move back into the top of value, but I think this name still looks good. Yeah, I would love to see a check back to the top of value, but you just may not get that. Another name that I like actually right here is Restoration Hardware. I think I mentioned this one earlier in the week too. But so again, it looks completely different than that SPY chart, right? I mean, it's above the 200-day moving average. Use the 200-day moving average as your stop, or maybe a little bit above it because it's about $10 away from it. But I think that's constructive. Look at the MACD crossover as well. So I like that. Going over to another sector that was that was very strong today was the Chinese internet. We talked about my whole thing is when China is very strong overnight. It's funny because some people don't look, they'll trade a lot of the names that are in the Chinese internet ETF like BABA or JD, and they don't even pay attention to what China does overnight, which I think is completely idiotic. If I were to be playing a lot of these names, I would be watching what the Hang Seng does, what the Shanghai does, because there's a pretty big correlation, and these were up pretty big last night. So this was one of your best performing groups today, up 3.3% today. It still has not taken out that 50-day moving average, but you can kind of go into, some of the names in here. You can kind of take a look. BABA is now over the 50-day. If you want to go long BABA, use that 50-day moving average support. Notice for me, it's got to get above value. So again, I'm not going to chase BABA here. It's kind of in no man's land for me because I think it's got to get above value so I could use that as a stop price. Right now, it's still in value for the month. This is where it gets a little bit more interesting. JD.com, you've got a virgin point of control, right? So this is, again, a virgin point of control is an area of high volume where price is not revisited, right? So sometimes once we get outside of value, which is above 22.27, the closer you get to this will act as a magnet. And price will want to get up there to kind of revisit where there was a high volume area. Right? There was another one here, but notice the price went through the price went through the point of control. So that's no longer, that's a point of control, not a virgin point of control. This one price has never gone back to. Take a look at also, it's still in a downtrend, but you've got your support here. So to me, it's a little bit better of a play than BABA because 22.27 would be the place that I know that the trade can't work, and you could kind of shoot for this 27. So I think that's interesting. I did not add very many trades today. I added one trade, an energy name, but it's something just because, again, if you look at the overall overbought, oversold, we're pretty overbought in the short term. But this one's on my radar. Another one, NTES, probably one of the best looking, maybe not one of the best looking, but a pretty decent looking chart. This name's been in a downtrend for a long time, above value, and where'd that VPOC go? So there should be one right here too. I don't know what, maybe something's wrong with my software right here, but there should be another one right here at 275. So that's a good place to shoot for. Another virgin point of control at 275. Notice this one. Let's see if I can change this really quick. I don't think I can. Let me try one more thing here. I think the time frames are just too long for this, which I know I'm not making any sense. But let's see if it'll show up again. So right here is that virgin point of control right at 277 for NTNS. And again, 246 would be your stop, and I think it looks pretty good, right? And also the MACD crossover in NTNS, so looks pretty good. Speaking of VPOCs that were taken out, a couple things, right? EWZ, Brazil. Is this a place to really get long? I think this was taken out. Oh, maybe it was close enough. Maybe it didn't actually get there. But this would be a great place. So someone asked me today, how do I use these? Well, yeah, there it is. Just takes a minute for Thinkorswim to gather all the data. But if I was, and I am long EWZ, but if I were and again, I didn't take the target, but that's a great place to take some, if not all, of the trade off. A huge move from basically 39. Look at the top of value, $39 to 42 for the Brazil ETF, and then we'll kind of see if it backs and fills. So I think that's a good example. And notice that there's no more behind here. Now again, it's not 100% certain. Price can continue to rally, and that would be really strong. But for me, that's a great place to take targets. I mean, you could see there was one that was taken out here. We went a little bit higher, and then we eventually went lower. All right, so that's a little bit about Virgin Point of Controls. I've been getting a lot of question about them, but really helped me in setting targets and yeah, and taking off risk, taking off exposure. So those are a couple of the Chinese internet names that I like. Another group that caught fire today was, and I think this one finished a little bit off the highs, but the healthcare equipment stocks, right? So again, kind of looks like a spy chart, right? This is still below the 200-day moving average, but if you start to look at individual names, I know EW did not have a good close, but I think if you let in value now, we'll see if this can go all the way through the value area. So 150.50 would be your support. One that I got long yesterday was Tandem. I don't think this one closed on the highs either, but I'm shooting for, there's that $45 VPOC as well, which I think I went over in last night's video. All right. So I did not take any targets in that one. I held on to that one. What else? So that's another group, and there's a couple other groups too, which I'm not going to cover them all in this video. But I think there's still some really good setups out there. But you could do things, right? You can hedge yourself a little bit for short term. You could sell some out of the money index call spreads. In case we get a little bit of chop, or even if we get a little bit of a retracement. But that's kind of what I'm looking for personally, and I can look at this in the Qs too, and a check, just a little bit of a check back, right? You can see that I've drawn a trend line in here too. So to me, it's just not a place to be short term, super aggressive adding new exposure. We've been doing that for the last 2 weeks. So I hope that makes sense. We also have a lot of earnings reports to get to. Oh, I didn't talk about the semis. Semis had a huge day. Interesting. Skyworks came out with numbers, and they actually rallied on it. So what that tells me is that some of the bad news is priced in, right? We've gotten a lot of bad news, or a lot of bad, price action to the downside. Apple was up 1.7%. Still, this one I would be careful of, maybe into the 20-day moving average. I would think would be a good place if you got long to kind of take some off, but that's just me micromanaging a little bit. But the name that I'm long in this space, in the semi space, is MRVL. That one I got shaken out of it one day, but I put it right back on. And I think I talked about that in a video last week. So put that position back on today, and I'm glad I did. So it's all about monitoring. Even if you get stopped out in a trade, keep monitoring that name for a re-entry point, because sometimes there are whipsaw moves, which we saw last Thursday. All right, guys, that's it for today's video. Have a great night. See you tomorrow.